The Federal Reserve just cut interest rates by 50 basis points. I'm going to break down the markets. I'm going to give you guys some trade setups, some trade ideas. We're going to briefly go over the market. I'm also going to be doing Q&A. But first, I'm actually going to be going over trading psychology. We've been doing The Mental Game of Trading. It's this book right here, written by Jared Tendler. He's attended some Thursday night lives. He's a trading psychology coach. And I'm going to be going over tilt. So it's going to be important to, up your mental game of trading. So it's kind of like eating your vegetables before you get the juicy trade setups. So be sure to stay till the end of the video if you want 20 trade ideas. But for now, I highly recommend taking notes because this is important for your day-to-day trading. And I'm also going to give some tips. So let's get into it. Chapter 6, Tilt. I have no idea who the hell this guy is, but Bryce wrote my slides. So if you guys know who this is, comment down below. I know, he looks like a hot tamale on fire. Either way, tilt is today's topic. Anger is a bad advisor, and I agree. So what is tilt? It's letting anger control your trading decisions. That's what tilt is, okay? So if you're not coming from a logical standpoint. And by the way, I am walking right now. That's because I am still cutting. Don't mind me. Maybe I'll slow down the speed just so I can focus. But either way, tilt. Letting anger control your trading decisions. Tilt, it actually originated from pinball. When players would tilt the pinball machine, maybe to move a ball in their favor or if they're angry or whatever. So that's pretty interesting. But another verb usage of tilt is I got tilted or I got angry and made some bad decisions. Tilt is a spiral that we want to avoid. So I've had tilt in the past. I definitely don't have tilt as much or to the same degree nowadays as I did before. And I want to share with you guys some things that work for me and also some tips that the book recommends. Okay, so what triggers tilt? If the market moves against you, that can be pretty annoying. But, guess what? It's the stock market. At some point in your trading career, the market's going to move against you. Random moves in the market, that can be, annoying. Just like on Friday, there was a 10 a.m. candle that just whipped both the entry and my stop on my futures trades. And I was pissed. But I didn't let it turn into tilt because of the techniques I'm going to talk about today. Stopping out of a trade can cause tilt. Taking multiple losses in a row can cause tilt. That can be angering, taking multiple losses in a row. Okay? So here are some signs of tilt. We want to notice and avoid these, okay? Clicking too many trades out of frustration, that's a sign of tilt. Forcing trades is a sign of tilt. Trying to recoup losses. So you'll notice a theme if you're more focused on the actual outcome of a trade versus the actual inputs, which is trading well, focusing on a setup, managing your risk, using proper position sizing, holding till you target. That's way more important than just focusing on the actual P&L. So if you're focusing on trying to recoup losses, that's a sign that you might be on tilt, okay? Thinking about money instead of the setups. Taking bad trades that you know are bad. So that's even worse. The trade is bad and you're taking it. That means we need to practice. We need to practice improving our emotional IQ. Okay? Trying to prove a point. That can mean multiple things. Believing you are better than the market. Nobody's better than the market. The market just is. It's a being. Think of it as kind of like the wind. Do you really want to think that you're better than the wind? It's irrelevant. Chasing the market is a sign of tilt. Taking trades without thought. Creating stories about the market. This is actually a big one among traders. Whenever somebody takes a big loss, sometimes that can be traumatizing. And they tell this story oh yeah, the market was really out to get me. And it may have been. It may have just been an unlucky event. But the story that you tell yourself is so important because it creates a loop in your brain. And then every time you remember that story, it solidifies even further. And it may or may not be completely accurate or objective. So be careful about that. Oversizing and using improper risk management, that's a sign of tilt. Fixating on the market, just take note on what you're really focused on. Sometimes if you're overly focused on one thing, that can lead to tilt. So just be careful. And of course, I'm going to give some remedies for this as well. Other signs of tilt, entitlement tilt. So this is believing that you deserve wins because you worked hard in the market. What's really tough about the stock market is the more effort you put in, it's not always going to equate to profits. And that's really, really tough. You know, if you're going to lose some fat, you know that you can lose fat if you just fast, or you're in a caloric deficit and you lift weights, you do cardio, you select the right foods. It's almost impossible to not lose weight, especially if you just fast. Like, that's a guaranteed way to lose weight. Or if to build muscle, like, it's really difficult to not build muscle if you're lifting consistently, lifting heavy, your nutrition is on point. But when it comes to the market, sometimes you can work really, really hard and it may not give you profits. And sometimes that can give entitlement in people. And that can lead to tilt, because it'll just be angering if you're working really hard and not getting the results you're looking for. Revenge trading. This is trying to get back at the market or someone. That's dumb. The market doesn't feel your revenge, but it makes logical sense. Sometimes if your logic part of your brain is hijacked by the emotional part of your brain and you don't have high emotional IQ. Jealousy tilt. This is common from social media. This is others making more than you on a certain trade. That can cause tilt. Believing you're unlucky. This is really important. And here's a valuable lesson. Be careful with what you believe. It tends to come true. Unluckiness in trading it can happen just as often as luckiness, especially in the long run. What we really want to do is focus on the edge, focus on the inputs, and then ironically, luck will start coming on your side, okay? Injustice tilt, that's where if you get stopped out a lot, that can be frustrating. The market, the trading gods are against you. Don't let that lead to tilt. Don't let a couple of stop outs ruin your account. Just let them be and learn from them. The need to be right. This is important. This is a big one in trading. You know, especially if you're used to being right a lot, which you guys probably are. You're hanging out, listening to this video, listening to this live. You're probably in the Legion. You're probably working really hard. You're probably right pretty often. And in trading, that ego can kind of get into the way. A big mindset shift that a lot of really, really good traders have is they're less attached to being right or wrong. They're more attached to just trading right and making money. I would rather be paid and wrong than lose money and be right in trading. At least when it comes to trading. There might be other opportunities in life where you have the opportunity to do the right thing and it may cost you. Do the right thing. But when it comes to trading, it's just digits. So we got to be robotic. Hindsight bias is another sign of tilt. I've fallen victim to this a couple of times. I'm sure we all have, where you look at a chart and you're like, oh yeah, I knew that was going to happen. Well, it's like, did you? Maybe you had like an idea or like a way that the market may have moved, but did you actually know? It's tough to say because everything's easy in hindsight. I can look at the chart in the past and be like, oh yeah, that breakout is easy. Or, oh, that supply zone was obvious, you know? But don't let hindsight bias trigger tilt. Mistake tilt. So if you make a mistake and you know it's a mistake, that can snowball into more mistakes. The big thing is don't let one bad trade affect other trades. And it's easy to say, but implementing it in practice, it's a little bit more difficult, but that's okay. Being aware about these signs can help prevent them, okay? And I have some solutions for you guys. Okay, so tips to prevent tilt and tips to trade well. This is the meat of this presentation. Know the risks you're unwilling to take. So that comes down to setting max losses. Ask yourself, what's the worst thing that could happen? Can I handle it? Okay, cool. I'm ready to take the trade. You're not likely going to go into tilt if you do that. Write out your decision-making process. This is helpful to prevent tilt because it systematizes things. It makes it non-discretionary versus discretionary. So an example of this would be, part of my stock selection and trading criteria, I want to pick a fundamentally strong stock. Ideally, it's in an uptrend, so I have the trend with me. It's at a key level where there's a good risk to reward. Okay, our probabilities of this trade working are going up. That can help prevent tilt. Obviously, things like solid liquidity, so I can easily get in and out. Intermarket analysis, so like S&P is agreeing with my trade. SPY is in an uptrend and looking like it has room to run. So my long setup on this large cap stock is likely to do well. Or even vice versa, if I'm trading futures, I like to look at, let's say I'm trading NQ futures. I like to look at where's Apple, where's Amazon, where's Google, where's Tesla, where's Meta? Are they in breakout points or breakdown points? Are they uptrending or are they downtrending? That can help confirm my trade. And that's part of the decision-making process. How's breadth doing? How's the advanced decline line? What's the VIX doing? Is the VIX elevated? Is something fishy going on? Is VIX downtrending and the market's just kind of grinding higher? What kind of environment are we in? Obviously, setting your stop areas, knowing your size, knowing your exit plan. Writing all of that out and talking through all of that can really help prevent tilt because it's logical. Your trading decisions are based on logic. Think rationally. Ask yourself, how would you explain the situation to a stranger? Because sometimes we can beat ourselves up. We can tell stories in our head about why things are happening. But if you had to logically explain it to a stranger, how would you describe it? Write out the things that you say. And so you guys probably see me trading live pretty often. You'll sometimes see me just talk or sound frustrated on days where the market's just kind of like hitting my stops. You'll see me excited when it hits my take profits. Take notice of what I say. Take notice of what you might say. Okay? And again, this is a common theme. Focus on the inputs. So obviously results are super important in trading. It's the only thing that matters. But if you focus on the non-monetary victories, the inputs that lead to good trading and good profits, profits come. So just switch your focus. So this includes improving your trade execution, getting your order out there correctly, setting alerts around prices. That's really, really helpful. I'm going to set a lot of alerts today as we go throughout this video. I'm going to be going over the trade setups, setting alerts near the price levels. Improving your focus. So focusing on one thing. What's the most important thing? Focus on that, dedicate time for that, and then move on to the next thing. Being adaptable. The market is constantly adapting, constantly evolving. If you can be adaptable, you're going to do pretty well. Following your plan, of course. So building a plan and then following it. And the way that we can do that is we can grade it. Grade your execution. Hey, I got all of my orders filled perfectly. I stuck to my stops. I stuck to my take profits or whatever my trade plan said for that particular trade. A, awesome. Grade your focus. Oh, hey, I was a little bit distracted. Maybe I was looking at the chat when I should have been focused on the charts. Maybe I'll give myself a B- for that day. Grade your adaptability. Oh, hey, I was long biased into the morning, but now I'm going to be short biased because signs are showing me that the market is turning. Grade your execution of the plan. I executed perfectly, or I deviated from the plan. And what you can do is you can have like a little word pad out on your computer and just jot down some notes. Remind yourself of what you have accomplished. This will help prevent tilt. So this has helped to just build that core competence. Hey, I'm waking up nice and early, well rested. I'm doing my pre-market prep. I'm doing my meditation. I've set all my price alerts. I'm not taking trades that are outside of what I'm, used to or outside of my edge. I've been trading for 8 years. I am a chartered market technician, so I should have more confidence in this trade. And even if you don't have like a professional credential, what do you have? Maybe you've completed some courses. Maybe you have a coach. Maybe you've got some trading buddies. Maybe you've done something really well academically. You all have something that you can anchor yourself towards, okay? Sometimes tilt can be triggered if you missed an opportunity. So if you do miss an opportunity, here's what you can do to improve, okay? How could I have made the right trade? I don't know. Some of these AI images are hilarious, aren't they? I mean, they're kind of on, they're kind of off, but I digress. If you miss an opportunity, ask yourself, how could I have made the right trade? How should I set up my alerts? Should I set like a buy stop order or a sell stop order? What steps would I have taken? So setting alerts near a price trigger, double checking your total portfolio delta, meaning how many longs do I have? How many shorts do I have? Did that trade actually make sense? Was it a high quality trade? You guys know about the expected value calculator, where you can plug in the probability of profit and then your risk to reward, and then it can give you an expected value. That can help you screen through a bunch of trades. And you might think something's an opportunity, but it may have had too much risk for your liking, or it just wasn't like a good setup in your playbook. That's okay to miss it. But if it was a setup in your playbook, it was a high quality A+ setup, let's catch those, okay? Double checking all time frames. That's going to be important. That'll be helpful to capture opportunities. Ask yourself, what perspective was I missing? Was I too bullish, too bearish? Was I fluid, or was I not? We're in a season where you kind of need to be fluid, especially for September and October. We have the markets at all-time highs. We just got a 50 basis point rate cut. Be ready for anything, but also stick to your core principles, stick to your core setups, manage your risk. Obviously, we want to do that all the time, but there are some times where it's like I want to lean a little bit bullish or lean a little bit bearish, just to help with conviction with the trade. Some may argue that that's wrong and you obviously always need to be completely neutral. Some argue you need to be really highly convicted long or highly convicted short. I go back to, if it works for you, great. So what changes could I make to my decision-making process? A simple one, especially since you guys are in the Legion, you can just be like, hey, Greg, what do you think of this trade? And I'll be like, oh, hey, I like it. Or, yeah, I'd wait on it. Or, nah, I don't like that trade. And that's just my opinion. It doesn't mean that the trade has to or won't work. That's irrelevant, but it's just another idea. It's another indicator. Okay? What improvements to my mental game are required so I can capture all of the opportunities? So obviously, you're listening to this video, you're listening to this live. That's good. You're improving your mental game right now. Try to read more books from people who have accomplished what you want to accomplish. Read a variety of books from successful people. That'll be really, really helpful. So more reading is always better, in my opinion. It's kind of meditative. Of course, breath work and meditation is very helpful for your trading. Working out, very helpful for your trading. When you work out and when you sweat, you actually have cortisol in your sweat. And so when you sweat out all your sweat, you're sweating out the actual cortisol. You're sweating out stress. And that can help you make better decisions. It's going to help you make decisions from a point of logic rather than a point of like scarcity or stress. Okay? Your outlook on life, how can you improve that or change your perspective to fit the market? And then journaling. So journaling, talking about what happened during the day, reviewing your trades, logging your trades, all of that is going to be really helpful for your mental game of trading. All right, choose your habits well. Look at this guy. Does he look like he has good habits? Habit is the most powerful tool in your brain's toolbox. I can't stress this enough. I believe even Ray Dalio said this, like, choose your habits well. They're going to dictate your life. Okay? So here are some good habits to schedule into your Google Calendar. You can open up your Google Calendar right now, and you can start scheduling in some of these habits. So pre-market prep. You can see on my Google Calendar, I've got like a bunch of things in my calendar. Pre-market prep is one of them. Meditation, even if it's just for a minute, ideally try to get like 15, 20 minutes, 30 minutes. It makes a huge deal. I can't say that I do 30 minutes each and every day. Brandon Carter should crucify me for saying that. But there's an uptrend in my meditation. What is really nice too is what's meditative for me is swimming, like swimming in the pool, because you can't be on your phone. And it's also exercise, and you just hear the water, and you're just left alone to your thoughts. You're just swimming along. I like being in the sauna or the steam room. That can be meditative. I can do my breath work there. It's super helpful. You can have a little timer by your desk and just set a timer for 10 minutes, 5 minutes, 15 minutes, and just focus on your breath. You're not going to spaz out as much if you do that. It's going to prevent tilt. It's one of the most important things to preventing tilt. When I wasn't meditating, when I wasn't working out as much as I should have, I would go on tilt more often. And I lost quite a few evaluation accounts in my futures trading because of just tilt when I didn't really need to. And so by doing this, it just kind of prevents all those catastrophic mistakes. And then you can just focus on the upsides. Setting price alerts and managing your stops, managing your take profit, schedule that in your Google Calendar. For me, I like to do that at the end of the trading day, set a bunch of alerts. Everything's kind of calm and nothing's moving. And then the alerts will go off tomorrow. So I'm going to probably get like 50 alerts tomorrow. I'll probably take 2 or 3 trades off of those 50 alerts. Check-ins every hour. Like, hey, how am I feeling? Some apps, like I know the Apple Watch has the ability to just kind of log your mood. And it can be a bad mood. You can be in a bad mood, just log it, get it out there, and then move on. Okay? Working out, we talked about that. Schedule that in. Reviewing your trades and journaling. Okay? That's going to be important. Prospect theory. So this is actually a core study of the CMT curriculum. We had to learn a lot about psychological biases. And prospect theory is a theory that says losses feel way worse than wins actually feel good. Okay? That's really important to understand because if we can observe this, then we can overcome it. The next step is ask, why does this loss feel worse than a win? $100 loss and $100 win, you should be equally as happy on the win as you will on the loss, right? But the loss usually feels much, much worse, sometimes 2, 3, 4 times as worse. The next fix after that is give praise and recognition for the wins. It doesn't mean you need to throw a party every time that you have a win. That's just weird. But you do want to elevate your winning trades. It's not to be delusional, but it's to account for prospect theory. So it's to account the fact that there is this bias towards the negative. Humans tend to constantly look for what's negative because in our caveman days, you'd get eaten alive by a saber-toothed tiger if you were too optimistic and you never focused on the negative or protection, So not to be delusional, but we want to account for the prospect theory. This builds momentum in your trading, okay? Making money through your edge in the market deserves recognition, okay? Making money through your edge in the market, it deserves recognition. I'm happy to give you that recognition. That's why we have a wins channel. We have a lessons. We talk about lessons in the Legion chat. I'm going to talk about some lessons as well as we get into the trade setups. Forgive me for going a little bit longer on this. I think this is important, though, to understand. Stick to your goals. Stick to your calendar. When you say what you're going to do and then you do it, you'll have extra motivation and your results will also improve. So you'll have more motivation, you'll have better results, and that creates a positive feedback loop. And it'll improve in tandem. Okay? And that's pretty much it. That is our chapter of Tilt. I hope you all enjoyed that. Let's get into the market analysis. And actually, I'm going to go over... let's just go over the market analysis real quick. SPY closing at all-time highs. It looks like the futures are opening up flat right now, 0.01% up. So we had a doji day on Thursday. We have a doji day on Friday, but after a gap down. So again, whenever I see dojis, if we break the low of the doji, we could see some downside. And we first have a gap on SPY. That gap is about 561.50. Okay? So 561.50 is the next short-term support if we break underneath 565. So I'm going to set an alert. At the gap fill, there might be an intraday day trade at 561.29 area on SPY. If we break above Friday's high, we do have resistance right away at about 570.68. So there might be like a scalp short opportunity there. Overall, I'm cautious on the SPY into September and October, but I am bullish into the end of the year. Both Romulus and I are of that stature. I do think that the economy is headed for a soft landing, which is really important to understand. So I do give the green light on stocks, which is tough to say because, there are risks of a recession. There are risks of valuations, but the trend is up, breadth is improving, and there's just no sign of really any deterioration as of right now. Of course, if the chart starts selling off, VIX starts spiking, and it morphs into something bigger, I'm ready for that. So just be open-minded. I'm cautious into September and October, and I'm bullish into November and December, and bullish into next year as of right now. So let's talk about some trade ideas, right? This is the juicy stuff, right? So first up, I actually want to talk about XLY. This is consumer discretionary. And if consumer discretionary could come back to this former breakout area, this may not set up this week, but I'm going to watch for 188. I'm going to buy quite a few shares for, a 1 to 3 year hold at about this 188 area. So former breakout area, rally, flag, rally. If you missed on the way out, you can catch it on the way back in. I've been long Amazon and Tesla, which are the two biggest components of XLY. And that brings me into my next trade idea. I said Tesla, by the way, to stay in this channel. Tesla has stayed in this channel. I did think Apple was going to break down last week, and I was wrong. I took a loss right away on Apple, and I'm glad I kept it small and kept it fast. I shorted Apple at 216, and this is an example of a good loss. So basically, Apple breaks this rising wedge bearish. We started to consolidate for a bit. I shorted Apple at 216, and literally the next day, Apple just ripped, and I just closed that once it broke above 220 and held an hour above 220. And so keep your losses small, stick to your risk management. I do think Apple is one of the more overvalued of the tech stocks, but if Apple really breaks 235, 236, and then holds, that's an all-time high breakout, and it's going to probably go higher. Going back to Tesla, though, I do think TSLL, cash secured puts, are in play. So TSLL, this is a double levered version of Tesla, and I do think it is worth wheeling. The premiums are high. There's going to be a bit of decay, but TSLL, I would go conservative this week, maybe sell the 10 strike cash secured put. You'll get a 1% return on your risk, but there's a very high probability that you won't get assigned. In fact, the delta on this is 0.12, meaning there's only a 12% chance this gets assigned, and there's an 88% chance that you won't get assigned. So that's something to potentially size up on if you want to. If you want to do 10 grand, you can make $100. Otherwise, you'll make about 1% return on that TSLL cash secured put. Okay? Some other trade ideas. I want to talk about RIG. So I actually took a loss on RIG when it broke underneath 5, but RIG could be back in play for the wheel. So keep an eye on RIG. Might sell the 450 strike cash secured put this coming week. Okay? So RIG back in play. Another good stock last week was Intel. And Intel wheel is in play. So, the entry is kind of tricky on this one, but this is a nice win last week. You guys know I put out that public YouTube video saying Intel, I think the bottom is likely in. That's when Intel was at about $20 a share. And I did say it could sell off into the teens, and it did, but it recovered. And Intel, good breakout on volume. Let's see if that can hold. And my target for Intel longer term is about $29 a share. They may get acquired by Qualcomm though. So just be mindful of that. Another trade idea is SMCI. This might just be a day trade opportunity. I might not swing this one because the swings can be pretty wild, but super simple long over 460. And the expected move, here's a quick tip for price targets on your day trading. Take a look at the expected move for the week. Plus or minus $36.71. What I like to do is actually take that and then divide it by the days in the week. So what's 36 divided by 5, 7-ish. We'll say it's about $7, 7.1 or whatever. So knowing that the expected move for Monday is $7, and I'm looking to go long over 460, a good target could be around this, 466 to 467 area. That's super conservative. If it looks like it has room to run, just let it run, trail up your stop. This is a breakout setup. So on breakout setups, it's much nicer to just trail up your stop because it really should just go. When I'm doing like a dip buy style trade, sometimes it can go shimmy a little bit lower first. So I don't like to trail stop a dip buy setup. I like to use a hard stop loss and then a hard take profit. That's just my style though. There are a lot of other factors at play as well. But a nice flat top on SMCI, targeting 467 on that day trade. Okay? And that kind of ties in with a lot of the semiconductors. SOXL, the wheel is still in play. So SOXL, maybe like the premiums are just stupidly high on this. Well, not stupidly, but they're high for a good reason because SOXL moves a lot. And I don't know if you guys remember, that win was really, really nice, getting assigned at 26, and then I sold the 28 covered call, got called away. Gosh, that was a ton of money just because we stayed sideways for a longer period of time. So SOXL wheel is in play. That ties into NVIDIA. It ties in with Intel. So SOXL might just be an easier way to trade that. Another trade idea is Goldman Sachs GS. We got just kind of like an inside bar on Friday, but if Goldman Sachs really breaks above, 502 and then above 506, that looks pretty bullish. Maybe instead of Goldman Sachs, I could go with XLF. XLF, we talked about the dip buy being around 43.50. The low was 43.35. And that's on the verge of all-time highs. It's a bit extended. The way I trade Goldman Sachs is, first I want to take a look at the Morningstar report. So you can just download the Morningstar report. It's just another indicator, but it is helpful to see what's going on. Here we go. So fair value estimate is 460. So maybe not. Goldman Sachs potentially overvalued right now. It's just one indicator. I'm not going to put too much weight on these CFAs that make these Morningstar reports. But, Goldman Sachs, fair value is 460. Morgan Stanley, fair value is only 97. Apparently Raymond James Financial is also is undervalued, actually. So that's interesting. But, yeah. So maybe I'll hold off on Goldman Sachs. That's just one other trade idea. Another trade idea is SMR and actually uranium in general. So let's take a look at URA, our Global X Uranium ETF. A nice good gap up on Friday. I think this has room up to the 200-day moving average. So URA wheel is in play as long as it's really kind of holding this consolidation right here. Another individual stock, this is much higher risk, much higher reward, but SMR, I might be looking at selling like the 10 strike cash secured put. The bid-ask spreads on the options are a bit wide, so be very careful. Don't open yourself up to too much risk. So much smaller size on this. But that's just a trade idea. Otherwise, you could do like 100 shares long, sell covered calls, maybe sell the 12 covered call. Like, yeah, you could even sell the 12.50 and maybe get like 20 cents. That's pretty good. So SMR wheel is in play for now. Another wheel stock that's in play is Ford. Again, Ford's fair value, it depends on the analyst you're talking to, but some say $19 a share. That'd be pretty cool. We have a little bit of a hammer candle on Friday. So Ford, maybe the 10.50 strike cash secured put. That's an idea. Otherwise, there's a mini breakout on Ford over 11.30. So 11.30, I'm going to sell the cash secured put maybe at the 10.50 level. And I do think Ford has room to the 200-day moving average if it breaks out. So that's another idea. One thing to talk about for day trades is I'm loving the SPX iron condors. Friday, I got a good gain on an SPX iron condor. So we just predicted the range would stay within. I actually did close it early and I needed to. Basically, I said, I think you're going to be above 5670, but beneath 5700. When there's like an hour left in the day and we kind of showed a bottoming tail right there, we were right at the midpoint of the range. I just closed it early. And the way that I can use iron condors to profit this week is knowing support, knowing resistance, knowing when volatility is really high or when it's really low. And then I also do use a little bit of AI to help out, with price levels. AI is pretty objective when it comes to what price can potentially do. It's not perfect, but it's enough to really help me just move that needle towards where the SPY may close the day, which is really important because then you can start making some good money on SPX iron condors, SPY iron condors, you name it. So that is another trade setup. Some other relative strength long ideas, GDDY, GoDaddy. And this one was a trade setup a while ago, back over 118. This one a bit extended. I would potentially wait for a move back to this like 155 area. But, there's a solid support, a solid higher low pivot. There's a little bit of resistance. Wait for a flag on GDDY. Okay, wait for a bull flag and then maybe like a breakout buy if it starts to do something like that. But just wait for a new setup there. Another one is QFIN. QFIN, long over Friday's high, 26.20. Does pay a dividend as well. QFIN, options are not liquid, so I'd leave that one alone. Okay, so those are the main trade ideas, trade setups. Some noteworthy ones, Netflix. If Netflix could break above and hold above like 710, I'm going to alert a call debit spread for December. I'm just basically saying, Netflix, I think you're going to be above 710 by the end of the year. Netflix, I do think, I don't think Netflix breaks 660. It could though, and it would just come to trend. 650 would probably be a good dip buy. Just keep Netflix on your radar for now. Okay. Nike's another potential stock on watch. I think Nike might slowly shimmy on upwards. So maybe like a bullish weighted iron condor. I'll need to see how Nike opens up though. And that goes for all of these setups. None of this is financial advice. Anything can happen in the markets. I'm not telling you what to buy or sell. I'm probably not going to take 95% of these trades, but it just depends on how it opens up on Monday too. The markets can completely change. Another one is LLY. Kind of got some goofy topping tails over here. If we get above those all-time highs is a clear sky breakout for LLY, but I'm actually kind of leaning a little bit more bearish. We kind of got these flat bottoming tails, and if we break underneath first 900, but really something like, 893, that's going to be a doom flush for LLY. The biggest risk with LLY is just its bid-ask spreads. So what I might do on something like this is I might go out to like October 25th. Make sure there's no like earnings or anything, right? Okay, yep, October 25th. And maybe do something like sell the 930, buy the 935. Boom, I'll get $235 of credit. My risk is what, $265? And basically, if LLY is underneath 930 by October 25th, I'm just going to collect this full $235. So I think that's a pretty good risk profile if it triggers. I may not get as much premium at the point of entry, but basically just saying LLY, I'll lose minus 265 up here, and then anything this price and lower, I'll make plus 235. And I think that that's a pretty decent bet if that triggers. So that's LLY. And those are the main setups that I have for this week. There will be more setups Monday morning. Let's get into Q&A. Okay? Let's get into Q&A. Okay. PJ says that's anger from inside out. That's funny. Okay. Now I know. All right. Let's break down some stocks, shall we? Let's check it out. And let me know if there's anything you want me to analyze specifically on this. First stock we have is PCG. PG&E Corporation. Looking interesting. That's looking neutral / bullish, especially if it holds 1950. Options are liquid. Yeah. I mean, what I would look for is maybe a tightening of the range. You got a slight break of the downtrend. You got nice volume right here. I like that. Weekly time frame looks good. Monthly time frame has a lot of work to do, but it does have space up here. Is this the one with the wildfires? Yeah. Interesting though. Let me just do a little bit. I do like to check Morningstar and CFRA. Fair value they give at 1650, so do be careful with this one. You can take a look at some peers in its group. Yeah. I've seen better, I've seen worse. Technically, the chart looks great. Fundamentally, there's a lot of risk. That's my thoughts on PCG. Let me know if you want me to revisit any of these. AQN. So this one's got a little bit of a stronger downtrend. Notice how the graph kind of starts in the top left and goes to the bottom right. Be very mindful of the moving average, the 200-day moving average. AQN looks like a higher risk, higher reward opportunity, but even then, this is looking like a weekly bear flag in front of lows. If I were to flip this chart upside down, I'd say that's a really bullish chart that I'd like to buy. But since the chart looks like this looks like a really bearish chart that I'd like to sell. In fact, I would go as far as to say it's a short underneath 5. AQN short. AQN, the puts are just not liquid enough unless you go deep in the money and then you have the right to sell 100 shares at 5. The October 18th 5 strike cash secured put, or sorry, regular put, not cash secured. Looks good to me. So that is AQN. Let's check out CCL. CCL I wheeled for a while and I did get called away. Wow, CCL is looking great. Good for CCL. Yeah, I'd be bullish. It's a bit extended towards resistance, like supply. I would wait for a pullback first, but yeah, CCL looks strong. Premiums are juicy. You know, yeah, I give a neutral to bullish rating on CCL. You know, CCL apparently fair value is $28 a share. And again, this is just an indicator. Analysts can be wrong all the time. I'm an analyst. I'm wrong from time to time, but it is a nice indicator to kind of just give like a longer term view look at something. But Carnival, CCL, fair value is 28. Hey, why not? RCL's fair value is 144. Look, NCLH, fair value is 30. That's another idea. Let's take a look at NCLH. Yeah, by the way, CCL 1750 is a good cash secured put to potentially eye up. Good idea. So NCLH, it's Norwegian Cruise Lines looking good. A nice flag break and just a bit extended into supply. Like it's rejected from this area multiple times. Is this the breakout time? It could be. I'd like a retest or a buy towards the 200-day moving average on NCLH. You could, take a look at cash secured puts, but those don't really line up until like 18. Could look at October 4th, 1850 strike cash secured puts. Almost enough premium to my liking, but not quite. All right. Okay. NIO. NIO. NIO, this is a sketchy stock. This is an example of stocks that can go straight up, can come straight back down. Notable breakdown underneath, 40 to 35 right here. I wouldn't touch NEO with a 10-foot pole. Even if this is the turnaround, maybe you day trade it. I wouldn't swing trade it or invest in this though. There's a breakout over 570. There's a breakdown underneath 5. That's all I got to say about NEO. Maybe you could wheel it if you want a speculative investment. All right, let's check out MPW. MPW has really high dividends. Yeah, I would be neutral to slightly bullish on MPW. It's a speculative dividend stock. Got a bit carried away. I think the risk is a little bit too high up here, but much better, of course, at the consolidation break. Maybe if you want to pick some up at 540, that's cool. I don't see any juicy breakouts just due to the nature of the candlestick formations up here. So, medical trust REIT, interesting. And solid uptrend. Weekly time frame looks great. Let's check the monthly. Monthly time frame looks great. NU, definitely on point. I give it a buy rating from a technical standpoint. I don't know much about this fundamentally or anything about it fundamentally, and that's okay. 13 and 1240 are potential dip buys. Options are liquid, which is cool. Options are liquid. Just got to wait for a better entry, a better deal. Yeah, I like the 200-day moving average as a reference point as well on NU. All right, NYCB. New York CMTY Banco Equity. Interesting. Yeah, this just looks dead. Weekly time frame looks bad. Monthly time frame looks bad. I would just stay away. There's so many other stocks and investments to pay attention to. I wouldn't short it. I wouldn't buy it. Maybe if I was long, I'd hold it, but I'd still just liquidate to cash. I'd prefer cash to NYCB. That's just my opinion, though. Anything can happen. Yeah, SMCI call debit spread. Yeah, you could do that if you want. The options, just the liquidity is just not the best for a spread. It's okay, I guess. It's not ideal, though. So I would not do a call debit spread on SMCI. There are better call debit spreads to do. The shares, though, are pretty easy to manage. The shares are easy to manage on that one. Good question. Okay. Could SMH being an appendant make SOXL a higher risk than the other wheels you mentioned? Definitely, Jesus. Definitely. Really good observation. Really, really high quality observation. Yep. SMH being in the pennant does make SOXL higher risk than normal. That's why it pays out such good premiums, because they're like, well, the risk is high. There's support at 29 on SOXL. So maybe the 29 strike cash secured put, it's paying out 0.38. Maybe you can get a better deal at like 0.6 or something and just pray that SMH survives this week. The S&P is slowly pushing higher right now. So that is something to consider. Another one that's pushing higher is Bitcoin /BTC up 1%. I did sell cash secured puts on CLSK. I did get assigned by 1 penny. That's cool though. I got paid 16 cents a premium to do 2 of those. So I'm cool with that. CLSK, I'm going to go ahead and sell probably the 950 covered call. Maybe I'll sell the 10 if we're gapping up on CLSK, I'll probably sell the 10. If we're kind of flat, I'll sell the 950. If we're gapping down, I'll sell the 9. That's my decision-making process for CLSK. Okay. Coin short setting up. Let's see. Coin is in a supply zone, but it's not really rejecting. Yeah, it's kind of rejecting. For something like coin, by the way, this bear flag was the juicy one that did end up playing out. I would look for the 200-day moving average as a short. That's just a better risk to reward. 191 is another spot. There's just not enough clear, concise price action for me to short this. Maybe if you're a savage, you could short it underneath Friday's low, because then you'd be breaking a flat support area and you'd be breaking a trend line. And so you could flush a little bit better. It's just not there yet. Bitcoin's looking just neutral to slightly bullish as of right now. So that is coin. What's a good target for TSLL? You don't do a target when you're wheeling. I mean, you do, you can. I wouldn't target anything on TSLL. I would just continue to wheel it at around the average cost. Tesla hit a little bit of resistance on Friday, pulled back a little bit. Tesla might test like 255. That's probably going to be an area of resistance. Weekly time frame, Tesla's hanging out at the 200-week moving average. Monthly time frame looks just fine. Daily time frame's above the 200-day. I don't really have too much of a price target on Tesla. I think you just kind of got to day trade it, take it day by day. It's a wild card with Tesla. You know, I wouldn't be surprised if it's worth, 190. I wouldn't be surprised if it's worth 1,900. It really depends on how they execute. What I would focus on instead is Google. I really, really like Google. Bought shares down here in the 149s, 150s. Google's my largest holding. I like it. I'd rather take a dip buy at 153 or just dollar cost average into Google, dollar cost average into GUI. That's a bit of a better investment, in my opinion, than not. Google's, depending on the analyst that you talk to, some give it price targets of $300 a share. I'm in the camp that Google probably sees about $230 a share in the next few years or sooner. Even Morningstar gives Google fair value at about 205. So Google's upside is 27%. It is a safer large cap stock. On a risk adjusted return, your bang for your buck is better on Google. And you could go out. This might be a trade alert too, be more of an investment alert. Go out to December 2026. Maybe do something like buy the 210, sell the 230. Boom. You're going to risk $450 to potentially turn into $2,000. So $450 is your risk. That's the most that you can lose, minus $450, but you can turn it into $2,000. So it'd be plus $1,550. That's pretty good. Buying the 210, selling the 230. December 18th, 2026. Google call debit spread. Set and forget. You can throw that in your Roth IRA or regular IRA or your regular trading and investing account and just wait. Okay. Thoughts on NVDL, NVIDIA? Yep. I'm just neutral to slightly bullish on NVIDIA. We might just consolidate for a bit. If NVIDIA really starts breaking above Friday's high, NVIDIA could test the breakdown range up here at about 123. It might be a while, though, before NVIDIA sees all-time highs. That's just my thoughts. So here's my thoughts. Chop, 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 chop. Maybe a slow grind up. Give it time. NVDY, I think, is a peaceful way to invest in NVIDIA, and you get cash flow from the dividends. That's why you see the downtrend, but that turns into cash into your account. So, good question on NVIDIA. BITO, I am still wheeling BITO. Average cost is 122, but that's without factoring in the premiums. I like it. I'm just going to continue to wheel it. It would be pretty telling if BITO broke 16, but really it's just, I should analyze Bitcoin. It'd be pretty, something crazy would be going on if Bitcoin broke underneath 50K. We could see this type of scenario. I've got multiple scenarios shown on Bitcoin. Mara, I think Mara's still good for the wheel. I'm just waiting for a better deal. Again, in the trade ideas section on this bullish piercing candle. I bought 100 shares at 14, sold the covered calls, got called away. Now I'm just waiting on Mara. CLSK is going to be very similar to that. And then also APLD. This is going to be very similar. APLD, bought 100 shares, sold the 6 strike covered call. Got about 8 cents in premium for that. So that's cool. On APLD, I'm just going to go out and sell probably the 650 covered call. And that'll be a good gain if it gets called away. If it doesn't, I get that cash for that week and then I rinse and repeat. Okay, so that's Mara. Let me know if you want any other ideas on that. ASTS. This one I wheeled last week and it actually worked out really well despite the stock being down 7.38%. This is doing really good. The premiums are really high. I'm probably going to go and sell the 29 strike covered call. Get 80 cents in premium. That's right about my average cost. Not including the premium I've taken in. Got 200 shares at 27.45. I don't know why. Oh, yeah, that's right. Because I bought 100 shares on Friday and I sold the 26.50 covered call. So I'm going to sell 2 of those calls. This has been a moneymaker, though. This is a good one. As in good for the wheel. It gets riskier if it really breaks down, though. So be mindful and manage your risk. If it breaks underneath Friday's low, it could be headed towards 21 very quickly on ASTS. All right. So that's ASTS. RILY. And yeah, I did buy the put debit spread too. I'm not going to, because I kind of noticed the bearishness on like in the middle of the week. I wouldn't do the put debit spread. I need to wait for a setup. RILY. Let's check it out. RILY. B. Riley Financial. Interesting. Again, does not look very good. This is a bearish chart formation. Upper wick. Lots of selling going on. I would stay away from RILY. Almost a short setup, but not worth shorting. Let me know if you want any more analysis on that. DFEN, defense. I talked about this on the Victory Talk podcast. I like DFEN long. I like DFEN wheel, cash secured puts. Could do bullish put credit spreads on this. The base ETF is ITA. This is the defense sector. ITA just making new daily highs. In fact, this might be making new all-time highs. Yep. So I like ITA long, you guys. That's an idea. I don't like war, but might as well profit from it, right? That sounds evil, but we're just clicking buttons in the stock market. That's pretty much it. Do what you can. Make the best out of every situation. ITA, I like it. DFEN. It's really tough to express my trade here because the bid-ask spreads are so wide. What I would look at on DFEN is I would look at selling the 33 strike cash secured put for October 18th. That's what I'd be looking at. Okay. That'll give 2 or 3% of return on risk. You do have to wait though quite a while. You have to wait a month. 3% a month is not bad. There's probably better places for my capital, but it's a good trade. 33 strike cash secured put. Maybe even go the 32 strike cash secured put because there's support right there. So 32 strike cash secured put. The bid-ask spreads are just so wide. Okay. AMZN. Add a little bit of short-term resistance. Amazon's fair value, again, about $230 a share, $220 a share. So I do like the stock. I like AMZY for investing and cash flow. 180 per share is the dip buy for Amazon. I can't really take many other trades besides that. I don't know if this is a hanging man or not. A candle like this after a run up. Volume's interesting on Friday for sure. Kind of good pump into the close. It's just a bit of a chase on a swing trade perspective. It could totally squeeze though, This could totally squeeze to 196 if it breaks above Friday's high and holds 191.50 as support. Is it the highest probability trade? No, but it's a trade that could work. I prefer the dip buy at 180. That's all I have to say about Amazon. A potential way to express the Amazon trade idea would be 180 bull put credit spreads. So maybe go out to December 20th, sell the 180, buy the 175. You'll get $145 of credit. Not too shabby, but you are risking $355. But there's a very high likelihood that Amazon closes above 180. In fact, the probability that it closes above 180, the critical support level, is 70%. So there's a 70% chance that you're going to make just $145 of credit or more, depending on your entry. And Amazon is likely to stay above 180. That's my thoughts on Amazon, PJ. Uber. Kind of all over the place, breaking out. This is an evening star bearish reversal pattern. So based off candlestick analysis alone, this goes sideways to slightly lower. Uber's more of a day trading stock, honestly. It's a good mover. There's a little bit of support along the way at 72. Obviously, the 200 moving average is going to be critical. Kind of a choppy chart. It's tough to get a clear read on that. I would just say, yeah, I don't know what else to tell you. I am curious about Uber's fair value, though. Let's see here. Pull up. I take a sip of water as this goes. If it goes. Okay, here we go. Uber. Fair value. They give it at $80 a share. Wow. Good for Uber. So Uber is undervalued. Lyft apparently is undervalued as well. $25 a share. DoorDash, they give a fair value of $135. It's above there right now. But Uber, 80. 80 is the fair value. So, yeah. What you can always do, too, is you can set up like bullish butterflies that center a strike around 80. So you could sell 2 of the 80 calls, buy the 75 call, buy the 85 call, and you just close it as it touches your double short strike. So that's super cool. So here's kind of what that would look like. Maybe go out to December. Buy. I'm going to close this, by the way. So I'm going to go to buy, right click, buy, butterfly, buy the 75 call, sell 2 of the 80 call. That's the fair value. And then buy the 85 call. Boom. It's not going to be a banger trade, and it depends on how it happens, but you're risking only $45 and it can turn into $500. It's probably not going to hit the max profit, though, because it needs to land and close at 80 on December 20th. I would probably produce a wider butterfly. Maybe something like buy the 70 call, buy butterfly, buy the 70, sell 2 of the 80, and then you can buy the 90 to protect. And there you're risking $233 to potentially turn into $1,000. So again, risk is $233, and then your reward is $1,000. So it'd be what, $777 is your potential profit. Is my math okay on that? I think so. Maybe. It's been a long day. You get the idea. So that would be Uber. I'm just curious. Yeah, you could see. Yeah, 767 is your max profit. Okay, there we go. 767. Baba. Let's check out Baba. Baba's doing really well. It's a bit extended though. I'd say 85 could be a dip buy. Definitely would not want to swing trade this. Look at all the gaps. So I would just say stay away. There's better trades. That is a dark cloud cover style bearish candlestick reversal pattern. Volume profile isn't bearish though. I'd take a look at FXI, the China ETF. Looks very similar. Kind of breaking out of this range. China might be rotating into a slight bull market. We'll see. Just keep an eye on the higher low trend just for a visual. Okay. So that's BABA. Next up, will we get an alert for APLD cover call? Yeah. If it's a part of Optimus, I make sure that I walk you through the trade entirely. So APLD, what I'll do is on Monday morning, I'm just going to say Optimus alert, selling covered calls. And I'm going to list out all of the stocks that are open on Optimus and the covered calls that I'm selling for them. Okay. So that is APLD and CLSK. Those should be some good premiums. Just chill with them if you want to, if you're comfortable with the risk. I can't guarantee that these are just going to go straight to the moon. They can also dump. Anything can happen. Honestly, CLSK looks like an ad over 980. So it's kind of tricky because the premiums are so high, but it's been in a range for quite a while. We'll see if that can break up or not. I'd like to target something like 1070 on CLSK. And of course, since this is related to cryptocurrencies and Bitcoin, it just carries more risk. And Bitcoin, even as we've gone throughout this stream, has faded back a little bit. So just be careful. Be ready for anything as usual. Gold making new all-time highs. Those positions are good. RCL, new all-time highs and looking for more. Very cool. Probably going to trail stops on RCL. Yep, URA wheels in play, SMCI long. We covered a lot today. UNG, I was called away last week. We talked about that. UNG, neutral to bullish. And those are the main noteworthy stocks. SoFi wheel is in play. SoFi wheel. I forgot about that one. Forgive me. SoFi, I've been selling cash secured puts every week. Just free money. I'd ideally like to get more premium on the 750 strike cash secured put on SoFi. Okay? So that's going to be important. All right. Hey, that's going to conclude today's session. Much respect to all you guys that stayed the entire way. This will be going out on YouTube. Monday is going to be just a lot of covered call selling and positioning for the week. Tuesday is going to be morning live trading. Wednesday is going to be adjust positions. Thursday is going to be morning live trading. It'll be really interesting to see how this week plays out. I'm ready for anything. I am going to be testing out this thing called Trade the Pool. I'll keep you guys updated on that as well. That'll be fun. Just something new. All right. Hey, thanks for tuning in, you guys. Peace.